And we're live. How's it going, guys?
Just like that. Just like
Just
that.
like
No
that.
intro,
It's
nothing.
it's
We're
that
just ready to
easy.
rock.
We're just we're right in. No, welcome to another special edition. I don't know if we can call it special anymore. This is pretty much how we do Let's Talk Markets now. So welcome to a Let's Talk Markets live stream. I don't know. Is my video weird for you guys
No, you
too,
look
or is
good.
that just on
I think
my
you look good.
side? Okay, weird. I'm getting
It
like I
looks a
have like
little
this.
slow.
Yeah, I have this like weird slow video. All right, well, I hope that's just my computer. It must be related to having 10,000 tabs open, and there's nothing I can do about it. I have a problem. Anyway, welcome to Let's Talk Markets. Super excited to have our special guests, Dennis Dick and George Kailas, back with us. Dennis from Pre-Market Prep on Benzinga and George from Prospero.AI. Two friends of the show that we love to talk markets. Often Let's Talk Markets means market structure, but on these episodes, we're actually here to talk about markets. What's going on, and what's going on with this rally, and is there any end in sight? Last week the Federal Reserve cut interest rates by 50 basis points. The market had an interesting reaction on the day, and I was live streaming with Eric from Outlier Trading on that day. We watched the market pop. We watched it fall back. It ended almost at unchanged on the day. And Eric and I were talking about, what would be coming after this. And not to say that I have any particular insight, but I said I think it's just going to rally like crazy tomorrow. So I only look. I was just saying the next day, but it has continued to rally like crazy. We're at or near all-time highs right now. So what do you guys think? How do you
The,
see it? What do you
uh,
think of this market? Yeah, go ahead,
the,
Dennis.
the
Let's hear it.
funny thing is, sorry to jump right in here, but the funny thing
Yeah.
is, certain stocks have rallied. And I know last time we talked, George, we were talking the tech trade, and the tech trade has actually rallied very well. But what is sneaky? It's been a sneaky sell off in the non tech trade. So if you look at the
Okay.
IWM, it has just quietly given back all of its gains from the Fed cut day. And you would think if you're cutting 50, well, the IWM is going to benefit more than anything, but that has not
That
been
was
the
that was the
case.
rally. That was a crazy rally that did not drop that day. Yeah. Wow.
Yeah, so that has not been the case. So now what? I mean, do we just turn around and I'll throw it back to you, George? Here, I mean, I'm of the opinion that tech stocks are still going to lead the way, rate cuts or not. Um, you'd think you'd have a catch-up trade though with the IWM coming, especially if we're going to start cutting 50 points at a time, like 50 basis points at a time. But we're leaking here on the IWM. Is this concerning to you? Throwing it to George.
I mean, not really concerning to me because I only ever reluctantly play small cap longs. Like pretty much my strategy always is large and mega cap longs, and then pretty much mid cap small cap shorts. I have been playing more larger cap shorts just because there's been a lot of up and down in the small caps, and I'd say I probably have overreacted a few times because there was a pretty strong rotation at one point to small caps a few months ago. And I definitely was, kind of sticking with my large cap, mega cap strategy, and my portfolio was bleeding a little bit. But, I think overall we're just in a market, and I think on the agenda is to talk a lot more about this. I think we're just in a market where we're just seeing a lot better growth and profitability coming from the largest companies. And it kind of makes it hard for me, and I think a lot of the market, to get excited about small caps where, like, you're almost inherently paying for growth, overpaying for growth relative to what you're
Yeah.
getting with the mega caps that are still growing like crazy in this AI boom.
Yeah. And again, it's just a tale of two markets. It's been like this for a long time. I mean, we
Yeah.
keep waiting for other stocks to catch up, but really, it's just been, we can say it hasn't just been seven stocks. It's been a lot of tech stocks too, but we know the Magnificent Seven has really driven the bus here. And I mean, right now, I feel like Meta is doing all the heavy lifting because you've had Microsoft consolidating quietly, not really going far. Amazon has actually come back pretty well, so Amazon's been doing some lifting too. Apple's consolidating, not really done much the last month here. Nvidia's starting to perk up a little bit, but really when we look at the markets in the last 2 weeks, it's been Meta. 500 to 570 really lifting. Tesla as well, starting to catch on here. I'm a cheerleader for Tesla here because I'm a real fan of Elon Musk and I'm a real fan of full self-drive, but that's a side story. But I mean, there's really been the tech trade and everything else, and it seems like today is just more of the same, where if we look at markets right now, you've got banks getting beat up, IWM down, oil getting hammered. You've got consumer staples not doing that well today. You've got some of the housing stocks off KB Homes trading down significantly here. Dow is down, but there's the Nasdaq, and there's Meta up another 7, and there's Microsoft trading up another 3. I mean, when did the other stocks start like carrying us a bit?
So what was last week? Like the Fed cut and IWM went crazy, and then it's just been bleeding ever since, and it's tech leading the way. Was it just the market said it's finally time, and then it clearly, it isn't. And is it not going to be? I mean, is this just the story of the market for the foreseeable future? Just tech, tech, tech?
Well, I think one of the things that big tech is offering, and especially as I think about algorithmic trading, is I think we're in such a tentative market. And, I think especially traditional election years have a lot of volatility leading into the actual election. And this year I expect even more. And we were seeing a lot of volatility even for general election years before this that are generally bullish until it gets closer, and then you start seeing volatility. So I think, in terms of the volatility, and we've seen some big swings in our QQQ and SPY and option sentiment, even week to week, back and forth. So that's something that has made me very cautious. But to relate to what I think you're getting from big tech in this is I think you get a lot more stable floor on those investments. And then you get them, as you're talking about with Meta, just kind of carrying over and plodding along a lot better than, say, a small cap stock, where if they have a tough day, you're talking about maybe 5% down. And then, both the algorithms and other investors and retail investors are losing confidence in those. And I just don't think, I think large cap tech is the one kind of group that you can say, I haven't seen that happen as consistently with. And I think that makes people, cling a little longer to those on the hard days and then come back stronger on the good days.
That's a fantastic point, George. And like you look at some even storied stocks from some smaller caps, like take a look at the chart of Celsius. I mean, here was a storied stock from the first half of the year where everybody's, everybody's got their Celsius drinks. Valuation never made much sense, but it didn't matter. The story was hot. And then it just seemingly like overnight, the story cools off and the stock goes from $90 to $30 and people are down 65% in 3 months. And they're like, what the hell happened? This doesn't happen in Meta. This doesn't happen in Microsoft. This doesn't happen in Apple. At least it historically has, but hasn't happened in a long time. So it makes you more comfortable, maybe to your point, holding on to the mega caps or maybe buying in dips in those, as opposed to thinking you've got the next little hot story and then all of a sudden you're down 70% of your money and it turns you off. I mean, even General Motors today, gets a downgrade from Morgan Stanley. That's now 5.6%. I mean, you're talking about a stock that's trading 8 times forward earnings. I mean, this is everybody's preaching value, value, value on a stock like this. Yet, here's a stock that can take a 6% hit. And you're like, well, it's 8 times. How the hell is it down 6%? Well, and valuation matters sometimes, but sometimes it doesn't to investors. They just want a good story. But, you typically don't see, Microsoft falling 5.6% on a downgrade.
So what do you guys think the market is trying to tell us, or is telling us about the state of the economy then, right? Is there something in this where, you look at what the Fed says and what they've done, and generally speaking, they are very comfortable with where the economy is and where they think it's going to be over the next year. I think they think they're taking a soft landing victory lap, and they were clearly behind, and this cut is to try and catch up. And sure, but if you ask, I think what Powell said last week was, this is not us, admitting we're behind. It's us committing to not be behind. But that's BS. They're behind. They should have cut a long time ago. Fine, they cut big to come on strong, and there's the market's pricing, and I haven't looked recently, but last week it was another likely 75 basis points of cuts before the end of the year. The market was pricing in 50 to 75 basis points. So
Yeah.
the Fed's going to come down pretty significantly. The fact that we're not seeing like home building stocks and such rally, and other sort of cyclicals that you would expect to see going into what should be some level of acceleration, is that telling us that the economy is not doing that great under the covers, and that this tech boom might continue because it's sort of like divorced at this point from the state of the underlying economy. And if people have any money to spend, they're spending it there. They've figured out how to monetize when people don't have a ton of money to spend because of the advertising. Because they make most of their money through advertising. Political advertising, obviously, is just a huge money machine right now. Is this just, there's tech and then there's everything else, and everything else is telling us that the economy is not where the Fed wants you to think it is, but the market looks great because tech has become just completely resilient to anything else?
Is there a possibility, and I want to ask George this too, that the market is just foreseeing that AI is going to be great for a lot of companies, clearly great for Nvidia, clearly great for Microsoft, clearly great for the mega cap, the big seven,
Right.
and not so good for a lot of other companies? Is there a separation that might continue to happen, that AI isn't good for the small caps? Maybe there's a lot of companies that, even though if they use AI, maybe these businesses, like think about how many businesses, are going to be disrupted by AI. Like think about how many,
Yeah.
it's scary when you start thinking about it. And maybe
is
you don't
anyone
want to
making
own
money
it.
from it? Other than
Well, we know Nvidia
the
is.
biggest
We
tech
know
companies,
Nvidia
right?
is.
Yeah.
Yeah.
Sure, of course, but
I
is
think
anyone else? Or is it just a threat to most companies? Like you're saying, Dennis. It's an interesting perspective.
I think it's kind of a broad threat, and I think what you said is correct. Where it's like, well, nobody really knows where the money is going to be made yet, but I think people are like feeling the broad threat coming, and I think the strawberry model is pretty interesting in terms of what that could potentially replace in terms of just like kind of mid-level management and that kind of decision making process. But I think there's a few macro things going on here that I think is very interesting. And I'm actually going to step away, from tech before I come back to it. And a story that I covered recently that I didn't know is like apparently Warren Buffett is like loading up on Occidental Petroleum, and you can actually get in at a lower price than him. And I think that that's just a very interesting thing, because traditionally, and we're talking about value, right? Traditionally, like in the market, when people see that, like, holy shit, I could get it at a lower price than Warren Buffett, like that gap is going to close quickly. But we're kind of seeing this weird thing where, even Trump comes out, and we're just going to say, like, let's say Trump wins, right? And we'll run that part of it because I think it's an easier analysis, right? He's saying, like, drill, baby, drill, right? And like basically like a new, energy, golden age, I feel like he's talking about. Yet the market doesn't seem to be taking that seriously, even though Warren Buffett thinks that that's interesting. But on the other side, you've seen some very positive reaction to like Bitcoin, right? Which Trump is also very bullish on, and both parties are like pandering a little too. So I think one of the things that we're seeing is a shift towards momentum and away from value, just because of the role that social media started to play, and like some of these AI overvaluations play in. Because we can all agree that Nvidia is very interesting, Tesla is very interesting, and they have very interesting long-term stories, but they might also be a little overvalued. Both things are true, but the reason they're overvalued is I think there started to be just the market recognizing some value and momentum and just like the story of upside there, that I don't think we've ever seen before. And I think part of that, like comfort with momentum, is that I do think we might see the first ever, bull market with higher unemployment rates and elevating unemployment rates. And I can't even tell you specifically what jobs I feel are threatened, like we're talking about. But I do feel like by the latter half of next year, that could be coming, just because I do feel like if there's one thing I know about public companies, it's that they've got to show progress on spend. So I think even if there's like a lot of dumb jobs being cut and not effective AI, efficiency replacements from day one, I do think we're going to start seeing companies just doing it because they've invested in it and they want to show an ROI.
Yeah, I mean, I think that's really those are some really good points. I mean, energy is a fascinating area, and it should be a reflection of economic activity, economic demand. You've got oil down pretty low right now, right? Trading under 70, and yet at the same time, there was a piece that I saw the other day um, where someone from Quantum Energy Partners came out and said the U.S. shale revolution has run its course, right? Like we're done. There's before as prices went up, the U.S. ability to produce massive amounts of oil was a check on the price of oil, and that's really increasingly not the case anymore. And so it's you would think that would be very bullish for oil, and maybe that's what Warren Buffett, that's the trend that he's seeing, and yet we're not seeing that in the price of oil today, which makes, again, it can go a couple of ways. It can be, well, that's a reflection of lower economic demand and activity, or it can be that, there are other sources of oil that are counteracting, that lack of supply, and so the price of oil is not coming back up. But you can see over the last couple of years, if you just look at oil, it's so cyclical. Interestingly, right between mid 60s and mid 80s, and it's really stuck there. And so if you see another rally in oil as economic demand picks up with interest rates dropping, and there's less supply to head that off. I mean, I've been very bullish on it for, I don't know, a year now, and it hasn't been the right it hasn't been the right side of the trade, but it really feels like maybe we're on the verge of that.
I'm curious, what do you make of like that lack of, kind of a Buffett boost that you traditionally see, like that, irrespective of the oil part, that, traditionally we don't see that kind of, you might call it a market inefficiency because everybody just always
Right.
assumes it's right.
Yeah.
Like that's an intriguing part of this to me.
I think on Occidental specifically, like he was buying it for the better part of a year between 57 and 60. And everybody, including myself, was like, well, you got the Buffett floor there. And he just seemingly, was buying almost every time it would come back in the range. And it would pop up a little bit at 65 and it would leak back into his 57 to 60 buy. And then he would buy more and then it would pop up, on the SEC filings. I think it just became the market became numb to it, where it was too many purchases. And I'm talking over the course of the last year, he's probably filed, a couple of dozen times, maybe more. The market just became numb to all those buys, and eventually it wasn't popping up at all when he was seeing a Buffett buy. And then what's happened now is the stock over the last month and a half has fallen drastically below his buy zone of 57.60, which is telling us he's full. He's big enough that he doesn't want any more of this. So now how long I have a Buffett floor. You've got, a Buffett ceiling almost, like where a lot of people have bought the stock between 57 and 60, banking with Warren Buffett, and they're looking themselves at 51 and saying, what the hell happened? It also was a CNBC interview. I follow the story pretty closely, where I forget who the CNBC analyst was that was asking, or a media commentary, but they asked Warren Buffett, it might have even been Becky Quick, and she asked, Warren Buffett, are you planning on buying the company? Because he was up to like over 30% ownership. And his response was, we wouldn't know what to do with it, meaning I wouldn't know how to run it. So I'm not buying the whole company. I think that was back in June. I think that spooked a lot of investors as well, because there was a lot of people banking that he's bought 20-30% of this company here. He's going to damn well buy the whole thing. He's going to take it all out at 80. And he took that off the table. And I think a lot of investors then were like, whoa, okay, well, the takeover is over, because he said, unless you think Warren Buffett is a liar, which he obviously is not, he flat out said he wasn't taking Oxy over. So I know I was long it at that time, and I'm like, that's the exit button. Like I said myself, I think the stock was around $62, but I'm like, see ya, and I'm not rebuying it on this, because I was of the same thing. I thought he might buy the whole company. So when he took that off the table, the stock is now fallen for the last 2 months. And sometimes headlines like that, you just, if you're in the story, you got to pay attention to little things like that. And that was a big thing there, because there was a lot of people that really were speculating that he was going to take over the entire company, and they're hurt. So now you get a situation, and it's not just an Oxy thing. Obviously, Oxy is always going to move the price of oil, and the price of oil has come down too.
Yep.
But Oxy, relative to the price of Exxon, relative to the price of Chevron, is massively underperforming now. I think for a long time it outperformed because you had the Buffett buy zone. So now it's like catch-up trade, and the people who have been buying off of Buffett are all of a sudden underwater, and they don't know what to do. So they're going to hold till they get their money back, because that's what a lot of people do. Heaven forbid you sell at a loss. But I think that's the deal with Oxy. I think that the Buffett, it's just company specific more than anything. If Buffett all of a sudden came out tomorrow and said he was buying Nvidia, there'd be an enormous pop in Nvidia on that. So I think they just got numb to the Oxy buys.
What about Bank of America, right? He's been selling huge chunks of
Yes,
that.
he has. And he's the same thing. Every time it pops over 40, you can clearly see like he's just like got his level. And it's like it went down to 530. There was no Buffett sells. All of a sudden it's back at 40, and there's a Buffett disclosure every other day, because he's sitting here and dumping into the market. And he knows when you're dumping 80 million shares, or and I mean serious size, he sometimes, like, we're adding up, like sometimes like a quarter of the day's volume. So it's literally him just selling all day, holding it down. So I don't think it's coincidence that Bank of America is struggling to get through 40, because Buffett is sitting up there and just keeps unloading. And that is a huge whale to get through. Same thing why Amazon topped out at 200, because Bezos had his zone where he was willing to sell the stock at 200, and it was trying to go up and try to go up. And there's more filings every day when the stock was at 200 and couldn't. And eventually the buyers just got exhausted, and the seller is still there, the whale that Bezos was. And that's when he saw the stock start to sell off. Now it's funny, Amazon coming back to that 200. You'll wonder if the Bezos sell zone is still there, and maybe he's not done liquidating either. But I mean, there's a lot of money to be made just following the SEC filings on the whales. I mean, when it's smaller, it's maybe not as important. But when you see a Buffett filing, or Bezos selling nonstop, Nvidia is a great example too here, George. It was lifting the last 2 days because there was an article that Jensen Huang was done selling, because he's been selling Nvidia, it seems like, every day as well. But there's an article, I forget who, I think it was Bloomberg, reporting that he's done for now. And then the stock lifted yesterday on that, and it's lifted here again today. They're like, oh, the whale is out of the way. So I don't think we give enough, credit to, like, when there's a big seller in the market, it's hard for the stock to go up.
So are you surprised actually at the strength of Bank of America? I mean, it has, you look at the last 6-month chart. I mean, it's really sustained its price level pretty well, given that, I mean, Buffett exiting, you would think, would be a pretty dramatic shift. You'd see a pretty dramatic shift. I'm surprised it just hasn't kept dropping, right? And he's still selling, and everyone knows it, and it's still done okay, right? It's still holding up.
I think the market just forgets, because it goes down to 37, 38, and they don't see any more filings selling. And he's like, oh, he's done. But then it comes back over 40, and he's there. I wouldn't want to buy it at 40. I've been playing it from the short side above 40, because you know what? Like, he keeps coming in. So it gets above 40. It's not a bad short until he's done. But then, you could end up in an Oxy trade where you play it too long, and all of a sudden he is done. And then the stock starts going higher. These whales are good until they're exhausted. You know this from, market structure and trading back in the day. The big whales, they move price, and they hold price down or they hold price up.
Right.
Yeah, I mean, especially with like the ETFs now. And I mean, I imagine like beyond the conversation about like, Bezos or anything, like I'm sure like, BlackRock and Vanguard, they have their allocations, and then I'm sure they've got these like auto buys or sells around certain levels. So I mean, I think that that's an interesting market direction right there, and I think that's, you know, one of the things that I think kind of makes momentum stocks so interesting to me, because I feel like that's one of the only things that can break these like increasing like whale level things. They've got to kind of like break through those circuit breakers to really move. But yeah, I think it's just, when I think about a bank stock, like I think you almost have to purely go on levels. And I mean, one thing that when people ask me if like bank stocks are a value, what I always say, and this is probably, you know, trauma from my Bear Stearns days, I'm just like, look, you know, the people that are like the banks that are trading those stocks, right? They're doing like deep counterparty analysis on the balance sheet of this. And there's like a term Chinese wall that says data is separated between the buy and sell side. But, you know, I don't really believe that that exists. And like, I think for a retail investor, that's like a very challenging aspect of it, where you have like all these people with way more knowledge of like the actual underlying assets of these banks, which is the real value of the banks, which, as like, you know, even if I was going to go through their like public filings with a fine tooth comb, you know, what was that, like not the First Republic one, that like modern bank, Silicon Valley Bank, right? You know, if you think about them, and if you think about, you know, going through and what you'd have to find or know to even locate those kinds of, you know, risk-based assets, or like, I don't think you even say, maybe it would say maybe there was a breakout of the fixed rate securities or whatever, but you know, for me, the market didn't know about that. My knowledge of basically what happened with Silicon Valley Bank was basically like that an investment bank, I think it was like, I heard it was Goldman, that basically was like doing some counterparty risk for their clients. And then one of their clients started to blab when Goldman basically told them, or let's say Goldman proxy, I don't know that factually, I just kind of remember that. You know, some big bank understood that. So yeah, if there's one thing I always have difficulty doing is taking a position on like whether I think a bank is a good buy, because I got no idea what's underneath the curtain there at the end of the day.
Yeah, I mean, I'm with you. I wouldn't. I don't know. And I don't want to own the banks. I don't want to support them in any way. Let alone, you know, I think there's a better place for my money. So, yeah, I'm with you on it, and I like
Would
that.
you short? I wouldn't short either.
I would short
I
Bank America up over 40, and I've been playing it from the short side. I have no
yeah
position on right now, but every time it pops above 40, I think right now, as long as Buffett's going to continue to file, I don't think it's a bad play. So, and I think, you know, we've seen it in the past. Again, when the whale's exhausted and he's done selling, stock can lift. But it takes the market time to realize that the whale, unless it's like a Bloomberg report that they tell you flat out that Jensen Huang's done selling, that helps a lot. But I mean, I don't think there's a Bloomberg report coming that's saying Bank America, you know, Buffett's done selling here anytime soon. So, yeah, I
How
would
many
play from
leather
the short side.
jackets do you think was enough for him that he was done selling?
Yeah, there you go.
lifetime supply of leather jackets. That guy. All right, so we're getting some interesting, you know, Travis is asking, could you guys talk China? And Dikembe Mutombo is saying that the market is it seems numb to global stuff. And Dikembe, if you're watching, I'd like to say hi. It's been a long time. I met Dikembe Mutombo 23 years ago. He probably doesn't remember it, but I really do, and it was a massive sports highlight in my life when the Sixers were uh, you know, in the playoffs in 2001. So good to see you again, Dikembe. But you know, he thinks that the market seems numb to what's going on geopolitically, and you know, I think that that's really a very fair comment. I mean, like the world seems a bit crazy right now,
Yes, it
and
does.
tech just does not care. The indices really don't care. Outside, you know, yeah, the small cap, but you know, big cap indices, S&P's doing great, Qs are doing great, Dow's doing great. Like there's, you know, I don't know. Is it surprising to you guys that there's not been more of a reaction to like what appears to be a massive Middle East war starting? You know, it's going from like this smaller, you know, still horrific conflict to now a slightly expanded even more horrific conflict with the potential to like blow up the entire region. Russia hasn't stopped at all with Ukraine, and there is an alignment happening that just sort of portends bad times ahead, and market's just like, yeah, whatever, interest rates.
I think the
think
market only seems to care about like China and the US, right? And I think some of when we've seen like reaction to the Middle East before is when there's speculation that China might get involved. Like I think that, Russia was a big deal when they first went in, but I think if anything, a lot of this war, like it's horrible, and I don't mean to like underplay anything, but I think it's shown that Russia is a bit weaker than
Yeah.
anyone anticipated. I think when they first went in, it was like, oh shit, what's Russia going to do next? But I
Yeah.
think the fact that that has been like bogged down, like it kind of underplays their power, and I think the overall fear. But like any little thing between China and the US seems to like, that seems to be the only thing that is freaking out the market. So I do think what you're saying about the war broadening, like I think that could be something where you potentially get like, hey, are there going to be larger players, coming? But like I would say the market, the way the market's reacting almost says that the bigger players that do freak out the market seem to have bigger fish to fry, including like reacting to that at all anymore.
Yeah, it's a selfish thing to say, like from what I'm going to say, but I mean, it seems like the U.S. just, the U.S. markets just are numb to it as well. They're numb to the Ukraine. Like again, to your point, George, when they first went in, I can remember trading, and they were attacking a nuclear center, and the market S&P was getting hit on this, saying, "Oh my gosh," and now it's like anything that's bombed over there, it's not even like the media is numb to it now too. You don't see much reporting on it anymore. And I mean, it just doesn't grab headlines. Like when it was first, it was like CNBC special event, what's happening in the war in Ukraine. And now the war didn't go away, just the media coverage in North America of it went away. And, and I feel bad for all those people, obviously, who are suffering over there. But the North American media has just stopped talking about it. And in turn, that, over here, that is. And in turn, I think the markets have just stopped, worrying about it as well. So now Middle East is something new. And again, when they first, started, but, we're starting to become numb to that one too, as these wars continue. If it does escalate and China gets involved, that's a completely different animal. But I mean, at this time, like the U.S. markets look at it and say, well, hey, these countries have been at war for like 2,000 years. Like it escalates at times, and and it's sad to say, but I think the media and social media itself is starting to become a little bit numb to it as well.
Do you think it's surprising the prospect of like a potential Iranian-Israeli war, and the price of crude oil is under 70, right?
Yeah, I would think oil would be spiking on this. Like I would think oil, this is the whole, and even defense stocks where we can look like a Lockheed Martin. They have been drifting higher, but they're not rip roaring rallying on this either, like you would maybe think they would be. I mean, General Dynamics is down here today, but NOC, Lockheed Martin, LHX, the defense stocks, they're not rallying on this either, which is interesting. So
well, I think that some of what I think some of what like I was alluding to earlier, that I just see, like, I think if you don't get retail these days, like no matter how good the fundamental story is for like defense stocks right now, I think these days, if you can't get retail, if you can't get some social media attention, some broader stories around it, like I don't think stocks really move without that. And I have seen say like I think there was the weekend, like the first weekend where people were like, is the Middle East going to escalate? And like General Dynamics, like North of Ground, like those went up a lot on that Monday because there was a lot of stories and a lot of social media buzz around it. So
it's a social media market.
Like, I think without that, like, you just kind of you need that pattern now, right? It might be institutions that start it. It might be retail that start it. But if you don't kind of get that pile on by the other like party and then another pile on, like you can't really get momentum in these markets anymore.
Well, and again, if we look to where the markets have come, there's a full conversation here to be had where retail 20 years ago was 10 to 12% of overall equity volumes. And you may have the numbers, Dave, but I think it's upwards of 25, 26% now. And that doesn't
25
consider
was the last I saw, and that's at an all-time high. And that's if you look at the like everyone, I was just talking about it, everyone thinks that like the 2021 stimulus checks was like the peak of retail market involvement, but it really that peak hit like 20 to 21%. So we're now at over 25%. That's, retail involvement in markets is at an all-time high today,
Yeah.
more so than during sort of the beginning of, the obsession with trading. And I think if you look at the reasons for that, it was not, I mean, stimulus checks were sort of a short-lived phenomenon, but right now you are seeing this wealth transfer happening. In the US alone, it's $84 trillion of money that is moving from older generations to younger generations. And younger generations, they don't want to be bored. They don't generally want to throw money in an index fund and forget about it. They want to be on their phones. They like trading. They like investing in companies that they care about. So to like George's point of the social media market, which I kind of really like that sort of overall conception, I think that is a massive driver of markets. I totally
It
agree.
is.
And I think that phenomenon is something that maybe the market itself hasn't quite gotten its head around yet.
Yeah. So
And
maybe
I think
even
there's a really cool feedback loop between that, because also you have like 75% of hedge funds now taking social media data and using
Yeah,
that as an input.
yeah,
Or I think
yeah,
it's
Yeah.
institutions, right?
Yeah.
So now you actually have a situation where it actually works, right? So that's just going to pull more people in, right? If hedge funds like by the numbers are following retail investors, those trades are going to work more often than they used to. And I think, it's not only the money transfer. I do think it isn't the same game that it was, where like Dave and I both started the same place on Wall Street, I imagine, where it was just like it was really insular then, right? And the
yeah,
best information what that was always leading the market was always on Wall Street. And there's still a
yeah.
lot of
And
that
they had the
that
best
goes on in terms
research, and
of value.
like the equity research, the analysts, they were so
Yeah,
coveted. It was so expensive, right? Like, and
yeah,
now it's totally different. It's
yeah.
it's like, you
It's
got to
not
go
the
on
only
Reddit to
game in
see
town.
who's.
Yeah,
Yeah, not the only game in town for sure. So
Yeah. And
that
to
that
your
is the
point, the
great
retail gets
democratization of
going.
markets.
Retail gets going, and the hedge funds start following retail because they're taking in the social media. So now you don't just have 25% driver; it's a lot higher than that. Those numbers and that whole feedback loop here. So there's a case to be argued. If you don't got a good story, you're not going anywhere. And there's a lot of stocks out there that don't have any story at all. They're just making money. There's a lot of
Yeah,
stocks trading 7-8% dividends. And they're probably wondering why our stock prices aren't higher, but they don't have a sexy story.
yeah. And I mean, I'm even the victim of that. Like at one point a few weeks ago, I was seeing that there was a solid move in like small and mid cap value stocks. And I remember saying to that, like to myself, like, I don't even know what that is. Like, and like not looking any farther. Like I was like, I don't know what small cap value is
yeah.
anymore.
That sounds
Like
boring.
whatever. Like, I'm not gonna search for that. Like I'm just gonna wait for the market to come back to me.
What ETF is launching? We're going to go after small cap value. How many people are driving and putting money into that ETF? I mean, so
Yeah.
then you've got the ETF effects too. What's a sexy ETF? An AI story right now, something cool, and they're going after the same companies, and then they launch and then they're buying those same companies. I mean, there's no ETFs, not very few launching, that are tracking some small cap value area here. So, I mean, ETF effects are an issue as well. And that's not going away.
Yeah, for sure.
So we're back to where we started. Mega cap
Right.
tech leading the way.
Mega cap
Full
tech. Like
circle.
there's nothing else. It's
There's
like,
nothing
how do
else.
you fill the
I'm
time
selling
talking about
all the other
markets when
small
it's like
cap
go buy
junk.
the cues? I don't know.
Just go buy the
Mm.
cues.
I don't think
Spy,
this is the
spies
last
me.
time we're going to be on this subject either.
Yeah, it's a constant theme of markets over the last couple of years, really. Um, and it's sort of super fascinating. There was recently, and I hate this. I didn't read the paper, but Cliff Asness, I know, put a paper out on how like efficient markets are breaking down, like the efficient market hypothesis, which again he he comes from the Fama French school, which says that like that at least the weak form is true, and so like not without getting like too deep into it, it basically says markets are good at pricing forward cash flows, right? And I think even this guy who has been in markets for his whole career and knows more about them than, he's forgotten more about them than I think I'll ever know. He is seeing that efficiency break down. And I know part of the reasoning, and again, I haven't read the paper, but I sort of read what he wrote about it. Part of the reasoning is the influence of social media, and the fact that you're starting to not have companies that should be valued higher get valued higher because they can't get attention. And you're seeing, this giant, it doesn't, I keep wanting to call it a bubble. And I know, George, you don't think that AI is a bubble. And like, I respect that. And I don't want, I don't think I should call it a bubble, but it does seem like it's 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 very frothy. It gets all the attention. It continues to go up, and this divergence that we're talking about, where you have most of the market here, and then tech all the way up here, like something there is fundamentally wrong if you see markets as a mechanism for resource allocation and corporate valuation and price discovery, right? Like something really seems kind of a bit broken right now, and tech being so high might be the poster child for that, but maybe it's not because tech is so high, it's because everything else is not keeping up. And is that really problematic? Does that leave you concerned, or do you just not care because it's all about returns, and as long as you steer in tech, you're getting the returns, so who cares?
I mean, we can go right into a
Well,
whole
I
market
think
structure
part of
issue.
it at a
Go ahead.
certain point, right, is like what I think you're buying when you buy Tesla or you buy Nvidia, right? Is like you're buying Jensen Huang or Elon Musk too. And
Yes.
like there's the capital they have, there's the innovations that they've proven, but you're also buying at this point, like we're living in a weird world where like technology is changing very fast, current events, so it is in certain ways, it's like a classic value play where you're like, I'm buying the management. But I do think like part of that is like, if I think about Nvidia and a lot of any of the bear case for Nvidia is basically like China US tensions, right? And I think that like we could even see there's like been a lot of hacking lately. I'm kind of afraid that there's going to be election difficulties and China is just going to grab Taiwan, for example, right? We'll see. I hope I'm wrong about that.
Me too.
But
yeah, that'd be terrifying.
yeah. But and there was a comment about China not getting involved I saw above, and it's like, well, they might get involved in that way. That's more their style. It would be a peaceful like absorption, of course, not a war. But you think about and that's just the bear case, right? And I think you always have to balance Nvidia with like, okay, this market share, this growth, this like potential tension bubbling, like that's the bear case. But the bull case is just like, if anybody gets business in this AI boom that we all know is happening and is definitely not like ending, it might slow down a little bit, right? Are you going to bet against Jensen Huang to not capitalize on that? Like not me, and especially you hear him the way he talks about creating a product company now from a hardware company, and the way they're just kind of becoming a one-stop shop and designing hardware for that. To me, that's kind of the manifestation of that. So that's why it's really tough. Like, I think both things can be true, right? It could be like, to your point, there are some bubble characteristics where it's just like, if there's a shock to the economy, right, or there's a scary story, all right, could these tech stocks drop 30-40%, right?
Yeah,
absolutely. Right. But I think that's more just because people would lose faith, not because there wasn't any like value in the trade. Because the other side, the bull case, is Jensen Huang and Nvidia just keep eating everybody's lunch and just like growing like crazy. And it's just like, I honestly think it's fairer to bet on that than against it, even though there are two sides there.
Mm-hmm. Yeah, it's geez. Now you have me terrified, George, with the idea that obviously there are going to be election problems, and the fact that China might act sooner, than I think what at least the defense complex thinks, which and as far as I heard is more like 2027 timeframe, which is scary in and of itself. Geez,
I mean,
that would be terrible.
But we've been talking about the potential for China to invade Taiwan probably for years now. And we know they want Taiwan. We know, but the reason they don't go in is fear that the U.S. would defend Taiwan, and we don't want to get into World War III because that could equal World War III. And I don't think China wants to get into that either. So it's like a fine line of how. I'm sure they've had years of discussions. How do we get Taiwan without starting World War III? And I mean, I don't know if it's possible, but so that's why this. And I think at a certain point in time, maybe that fear, like this is definitely one of the reasons that the FXI, that stocks like Alibaba, stocks like Baidu, stocks like Pinduoduo have underperformed because of the risk that if China invades, we saw what happened to Russian stocks. Not that there was very many to talk about, but I mean it was over. I mean, what happens to a stock like Alibaba when China goes and invades Taiwan? I mean, what happens to Nvidia for that case? But I think there's always been a discount on all China names. Why Baba trades 9 or 10 times earnings, with a growth business that's focused on AI as well, where you got Nvidia trading 40 times earnings, is because of that risk. It's a real risk that maybe one day they do go into Taiwan. But we're starting to see
tariff too. I saw a wonderful like just a classic Trump answer to a question the other day where he was asked about childcare and how he would fix childcare, and his answer was tariffs on China. So he's got big plans for these tariffs.
The tariffs on China
I think he thinks he's going to get $1 trillion a year from these tariffs.
Both administrations,
multiple
though.
Trillions. Yeah, multiple trillions.
Yeah. It's the one issue that China stocks have too, is that both administrations are going to want to be, and they're acting like they're going to be tough on China. I mean, both.
All right, we have a special guest on our show now.
There they go.
Well, I think the Democrats would always, in theory, like to be tough on China, but I think Trump, like, there's always some fire to the smoke with Trump. Like, he does say a lot of stuff, but especially when something comes up again and again, like, I think he's got some real tariff plans here. The Democrats, I don't think so much.
So you think China stocks tank on a Trump victory like that, like big time? And maybe it's the polls.
Bitcoin, and buy Bitcoin, sell. That's a pair trade there.
Buy Bitcoin, sell China, if Trump wins. So we watch the polls, and if Harris moves up, we stay long China. If Harris starts moving down, not that the polls mean anything, we don't hold China stocks into a Trump victory.
No,
but we get long Tesla. But we get long Tesla.
Good actionable advice. Yeah, get long Tesla. Whatever you can do.
Tesla, because Musk is right there, friends with Trump now.
That's right. Yep. Yeah. All right. Got some good questions here. So let's shift gears for a minute and talk about seasonality. Usually, September, October are pretty bad. I mean, this September's been a weird one, right? Because the Fed, you've known they were going to cut. The market kind of anticipating and then got the cut. So maybe it's a bit of an aberration. What are you thinking about next month, October? Or any real risk? Any risk heading into the election, or do you think that we'll just continue to coast until after that?
I mean, September, October have always been historically weak months. We started on the first day of September, and the S&P fell 2%, and we're like, oh my gosh, here we go again. And then we were weak for the whole first week, and then we turned around and they just couldn't stop buying, and we bought the S&Ps right back up to all-time highs. So, I mean, we're halfway through this, and actually, if I think you look at the data, September is historically worse than October. We all think about Black Monday, and we think about October as being the worst month, but it's actually September. So we only got 3 days left of September, and then you get into October, and then you start thinking about, the political, and, usually stocks can run up into a political, obviously election cycle here. We're going to be getting close to that. And then you get to November, December, and everybody's excited, Santa Claus rally and all the other things. So, I mean, we're kind of halfway through the tough months, and so far, so good. Now, anything can happen. Maybe we're going to get this, crash out of nowhere on some geopolitical headline, but right now, I mean, the markets are holding up very well, and we're halfway through the tough months.
Yeah, almost shockingly
I
well,
break
right?
A little Wall Street secret for a lot of people here, and it might not be a secret to but the only time that Wall Street people really take off is in August, and like they're just coming back with piss and vinegar in September, and like it makes sense. Shorts are harder, like trades to make, right? They require more attention. So basically, a lot of that seasonality is like, and not all of it. There are some seasonality to businesses, but a lot of people that I've talked to on Wall Street are basically like, we're coming back to work, coming back from our vacations in the Hamptons, and just shorten the shit out of like what we think should be shorted in these like quiet months when volumes are lower and some other stocks are pushing up for that reason.
There's a point there. Like
Yeah,
August, the
yeah,
dog days of August. I mean, I take my vacations usually in August as well for the same reasons. The markets are
yeah.
quiet.
There's no
I take more
volume.
time off in
Yeah,
August. The
Yeah.
kids are out of school, and then you come back to in September, and then there's action and there's movement. I mean, there's a good point to maybe it is just the dog days of August that lead to potential weakness in September. Maybe the kids really are upsetting all these portfolio managers on their holidays there. They were annoyed. I'm going to take it out on the stocks.
yeah,
We
yeah.
got a whole theory here, George. We got this dog days of August theory here of affecting our seasonality in September. So
work, they're putting the suits on, like, yeah, it's yeah, taking it out on everybody.
It's still hot. They're pissed off. They got to wear the suit. Yeah.
yeah.
All right. So what do you think for the election? Do you think that the market will have, aside from the long Tesla, short China pair trade, if Trump wins, like will the market have a real material reaction to either one of these candidates, or do you think generally speaking it's probably even on either side?
I think it definitely has an effect. There's going to be certain stocks that are going to benefit under a Trump administration, and certain stocks are going to benefit under a Harris administration. So
Yeah,
I think obviously you look at clean energy, and you look at solar stocks. If Harris is to take the White House, solar stocks probably get a big jump that day. I would think. I would think obviously oil stocks would be the opposite. I would think that's going to do better under a Trump administration. So, I mean, there's definitely sector trades. The question maybe is,
sectors. Yeah,
does tech win no matter what? And
right. Yeah,
it probably is the case. So, I don't know how it affects Nvidia or not, either administration. I think Nvidia wins no matter what.
I think cryptocurrency is probably like the safest thing you can have going into the election, because I do think, like, if there's chaos, sometimes cryptocurrency does well. But I don't see, like, you see people talk about it as a market hedge. That hasn't necessarily been the case a lot of the time. But I mean, I think realistically, if Trump wins, the market is gonna rally. Like, but I expect a complete opposite thing if Kamala wins, because I don't think it's gonna be a clean win. Let's be honest. So I
Yeah,
think, like, if the votes are, it's looking like her, there's going to be a lot of vote counting, and
yeah.
like, and I think the market
Certainty will
is
be bad.
not going to do well during like whatever that process
uncertainty.
is. So it becomes a hard event to play, because I think we pretty
Yeah.
much got a very clear bull event and a very clear bear event coming out of it. And so, like, yeah, I just make sure you're well hedged regardless,
Mm.
and maybe
Yeah.
like making sure there's some. And I'm not the biggest crypto person, but I like, crypto is the only thing that I kind of see doing well. Like, because
A
Nvidia
wild
is
change from our first conversation, George.
yeah. No, I normally do not. Yeah, this is not my normal advice.
All right, you heard it here first from George, folks. Sell China, buy Tesla, buy Bitcoin. All right.
Yeah.
Um, I think that's a wrap. Anything else that you guys wanted to hit on before we call it?
And we touched on a lot of different subjects. It was a lot of
We did,
fun.
yeah.
I love talking with you too, George. Dave, it was a lot of fun here. Looking forward to doing it
Likewise. Yeah.
again. I think I think it's just going to be, there's uncertainty going into this election. I mean, we don't have a clear leader even yet. Some polls have Harris ahead, but if you go on social media polls, they got Trump as a slight leader. I mean, we have uncertainty. There's not a clear leader here even right now. So it's going to be, very interesting this next, 6 weeks or so leading up to this election, where the
For
markets
sure.
could have a lot of, ups and downs as, we start to see, separation maybe, or maybe they go in 50-50 coin flip. And then, like you said, hedge yourself, because who knows what's
Who
going to
knows?
happen.
Yeah. Yeah. Yeah.
Yeah. And I mean, the other thing is, like, I would watch yourself on any sustained bull or bear rally. Like, because I think we are going to be a little range bound here because of like the uncertainty, and people are not going to want to like just keep letting it ride on like good days. So I think that's the one thing. Don't get too, I wouldn't at all be like loading more and more on positions as the market's going up. I would be kind of doing the opposite behavior, maybe starting to like hedge as your positions go up, or vice versa. Just because I think if there's one thing I'm fairly confident in, it's that I don't think we're going to see a sustained rally one way or the other, and if we do, it's going to be like uneven.
Yeah. All right. Well, look, I really appreciate you guys coming on. Fascinating conversation, ton of fun as usual. We'll do another one before the election. We'll see how close we can get to it, and it'll be, I think, even more interesting at that point. So, thanks everyone for tuning in and watching this Let's Talk Markets live stream. We have a lot of fun doing them. We hope you appreciate them and get something out of it and learn something every time. And as always, let us know what you think and let us know what you want us to talk about, and we'll get it in there on another episode. So good luck, everyone, and good to see you. And we will hopefully talk to you soon.
Thanks.